The trend is your friend until it ends. I'm pretty sure if you're a trader like myself, you've probably heard this phrase used a lot of times. And basically what it's insinuating is you shouldn't be counter trending, or at least if you're going to counter trend, only counter trend when the trend is over. But one of the tricky things for us traders is to determine when the trend is over. And that's basically what I'm going to go over in this video. Last week, I had a trade on USD CAD. Actually, I had two trades. One of them was on USD CAD and they were both counter trends. So what I wanted to do with today's video is basically break down the sort of things that I look for when counter trend trading. So without wasting any more time, let's go straight into this video. But before we go into the video, guys, do me a favor. If you find value in this video that I'm putting out, please make sure you like, make sure you subscribe, and share the video with other people so that they can use this content to benefit their trading education. So without wasting more time, let's jump into the charts and I'll show you what basically led me into taking this trade on USD CAD, which, by the way, I did post before the trade played out on my Instagram. So if you're not following me on Instagram, guys, check the link in the description and make sure you follow me, because in future I might be giving more trades ahead of time before they play out. But anyway, guys, enough talking. Let's get straight to the charts. Let's see some action. So before we get started, as you can see here, I've already marked up, the take profit, the trade here in terms of where my entry was and where my potential take profit was. I'm not gonna lie, I didn't take the trade all the way, but I'll explain that as we dive deeper. Firstly, let's start on the daily chart. As you know, I like to basically get my bias on the higher time frame. And what you can see here right off the bat, you can see I had this trend line that was starting from August of 2022. And I also had an inner trend line that started from 15th of November 2022. Now, the reason why I drew those is because from that higher time frame standpoint, I like to know the direction of the market. Basically, I want to know where this market is going so that way I can build my bias and basically determine where I'm going to be trading. So already from when this market broke this inner counter trend line, I already knew that sellers were taking over this market and we should be seeing more bearish movement. As you can see, we had this massive bearish candle that broke that longer term trend line. So that was the final confirmation that I knew that this market was in a downwards trend. So what I was looking for when I saw that was basically, I was looking for selling opportunities. If you looked at my previous video that I put out last week, you can see that this was basically a similar setup in terms of the way the market was moving. You can see we had multiple key level breaks, and as well as the counter trend line breaks. So for me, what I was looking for was, I knew that this market was bearish, so I was looking for a bearish opportunity, right? So why did I change my perspective? Why was it that I decided to go on to look for bullish opportunities rather than the bearish opportunities? And we can see that when we drop to the 4-hour time frame. So when we drop to the 4-hour time frame, last week, basically, what we saw was on the 26th of January, we can see this massive wick. Yes, this was a bullish candle. So for me, I was just like, well, if the bears are strong, right, why are we getting such a massive amount of bears coming into this market on the 4-hourly time frame? So this is what started to make me think otherwise, that maybe this bearish sentiment that we've been seeing for the past couple of weeks is coming to an end. And you can see that even before we had this massive candle with the wick, what you see is bears were basically trying to push, and price was stagnating around this key level. So you can see that they were finding it hard to carry on this bearish momentum to the downside. And if you notice, since this bearish move started, we've never seen a candle similar to the one that we saw here. So this for me was just like, okay, maybe price is hesitant to keep pushing to the downside, especially because it approached this 1.33 psychological whole number. And as you know from my previous videos, I love using that to basically clue me in as to what the market is doing. So when I saw that price was hesitant to break this level, I basically jumped on my VSA chart, because volume spread analysis can give us clues in terms of what the smart money are basically doing, because we're looking at volume. Smart money are the guys with the heaviest volume. So what that does is it lets us know what they're basically trying to do. So when I see wicks like this and I see things like this, especially with the spread, right? The spread meaning the height of the candle, I basically jumped on the 1 hour time frame to see if I can find any VSA clues that could basically let me know that maybe this market is about to turn around. So if we go on the 26th of January and you can see that massive wick on the 1 hour time frame, this was basically a shakeout. Now, if we read the description, a shakeout is a markdown on a widespread, normally closing up near the high to shake out weak holders. If volume is low, then supply is dried up. High volume suggests demand overcame the supply, but remember, this supply will hold back future upward progress. If the spread is narrow, it will have less impact. So you can see that based on the shakeout, right? This was basically trying to shake out these sellers, these weak holders. And for me, that was like, okay, I'm going to start looking for a counter trend trade. Now, what else clued me in? So if we go back to the normal chart on the hourly time frame, what you can see is when we had that shakeout, right? You saw the bears aggressive selling. If you remember on my previous videos, aggressive selling is usually determined by volume imbalances. And you can see here that there was massive volume imbalance, which means there was aggressive sellers to the downside with very little, or as a matter of fact, non-existent buyers, right? So you can see that the buyers were not getting involved because we had a ton of buyers here. However, one thing to note is that we had this bearish aggressiveness, but we couldn't even push past the bottom of this candle, because you have to remember the key level is down here. So when we got this bearish aggressiveness, immediately we got some buying aggressiveness as well, right? And then we got bearish aggressiveness again, right? And then they tried to basically push price to the key level, and you can see immediately we found price basically not being able to push down. And what this means, guys, in volume terms, is that sellers were being absorbed. They were basically, there were so many market orders trying to take this the price below the 1.33 key level, but they were basically unable to push price to the downside. And you can see we had multiple aggressive selling coming in, but price held at the same level. Another thing to note here is, as you can see, I've already drawn it up, there was a falling wedge, right? So all of this activity that's going on was basically creating, well, momentum to the upside. So, and what you can see is when the bulls came in on the 30th, which was the day I took the trade, you can see a massive amount of buying coming in. We broke this falling wedge. And for me, that was clue that, okay, well, this market is about to turn around, because if there's a ton of sellers, this market, you shouldn't be getting successful buying as we're seeing basically on the 30th. So that was the other thing that I saw on the hourly, right? So now, if we drop down to the 15-minute time frame, what I want to show you is, take a look at these aggressive sellers that were coming in, the second wave of aggressive selling that was coming in, right? what we saw was when this bullish aggressiveness came, we saw that price broke the high of the previous day. And remember, sellers were still in control on the 27th of January. So on the previous day, sellers were still in control. So what we saw was the buying wave that came in, the aggressive buyers. Not only did it break the falling wedge, it also broke the high of the previous aggressive sellers. So already, one of the things that I look for is behaviors in the market, right? Because we know that the market typically is ran with two emotions, which is fear and greed, right? So what you can see is some of these sellers, they were probably greedy in a sense where they were not trying to take profit despite saying that the market was stalling. And then you had these other guys that will basically be fearful when the market goes beyond the entry point. So we had all these waves of sellers, market is pushed above them. So what I started looking for was, right, if we come back here, there's a high likelihood that these guys are basically going to be bailing out. They're going to be running for the fences because they've been trying to sell for several days. Price is not going in that direction. Price has been absorbed. There's a key level here. There's a break of the falling wedge. Guys, I'm sorry, but there's no way price is going to carry on to the downside. And that's why I started looking for buying opportunity. And that's when I posted this on Instagram saying I'm expecting price to come down to this level and push off, because we had aggressive buying coming in alongside all the other confluences that I mentioned earlier. So another thing as well that we need to take note is, remember in my previous video, I talked about the volume gap, which ICT traders or smart money concept traders, they refer to as fair value gap or imbalance, whatever you want to call it, guys. Whenever there's aggressive buyers in the market, buying or selling in the market, there's typically that imbalance, that gap. And we saw this on the 4 hourly time frame. So let's just jump back to the 4 hourly time frame. And you can see on the day where I was basically trading, right, we saw this massive bullish. After testing the key levels, you can see price held for about 12 hours at the key level, unable to break, and immediately buyers came in, completely took over. We had a break of that wedge there, and we had the volume gap right here. Now that was basically my kill zone, because for me it was like, these aggressive buyers are not going to let price go down. And if price comes back, what I'm expecting is that the aggressive buyers are probably going to add to their positions. The aggressive sellers that were selling were going to be exiting their positions, which means more buying. And then professional traders will see this action and the activity. They're also going to be piling on. And that would just result in a massive push to the upside. So that's why I was so confident in this trade, to the point where I actually posted on my Instagram before the play took place and further transpired. So if we go back to the 15-minute time frame now, what's my entry? So going back to the 15-minute time frame, as we said, I've seen the breakout happen, I've seen the volume gap, and that was my kill zone. So now what I want to do is to make sure that this kill zone, I wanted to make sure that it was going to hold. And one of the ways that I do that, I also use volume spread analysis. So if we go onto the volume spread analysis chart on the 15-minute time frame, because that's my kill zone for intraday trades, what you can see, so we'll just go over to the day where this trade took place, which is the 30th of January. So as you can see, when price retraced to the kill zone area, what we saw right here was no supply. Now we had several VSA signals prior to this one, but this one was the one that confirmed it. However, those ones were basically giving me a heads up. So you see test, right? You see strength coming in. What else? We saw that we had a no supply, and then the final one, which is a no supply test. So let's just read through the description. What is a no supply test? Basically, this bar has fallen off on low volume, and a narrow spread showing a lack of selling pressure at that point. So as you can see, basically guys, low volume, you can see the line going through. Basically volume was below average. And of course it was, because after all this action that's taking place, nobody's trying to sell the market, right? So you can see that as price came back down into this volume gap where the aggressive buyers were, there was no volume, as well as, and this, you could also use this as a retest of that falling wedge, of the breakout of the falling wedge. So at this point, guys, price already pushed up for the day. We had this retracement here, and I was looking to get into this market. So basically what I wanted to make sure that this volume gap was going to hold, because I intended on placing my stop loss below this volume gap. So basically, if I draw my fib retracement tool, you can see that price retraced to the 61.8% of that daily move. And typically my target would be the 0.27 as well as the 618 right here. And basically you can see we had that move, but my entry was a bit late because, like I said, this was a counter trend trade. I wanted to make sure that this basically zone right here was going to hold. So what did I do? I basically, after I saw this supply test right here of the zone on low volume, I wanted to see a counter trend line break, just to show me that the bulls were coming in, and there were people basically saying this. And you can see once we had that break right here, I'll just zoom in a little bit so you can see. Once we had that break of the counter trend line and I saw this massive bullish engulfing candle, I was like, okay, yeah, the bulls were basically coming in and getting involved on this trade. So guys, that was basically the trade. I got out somewhere around here for like a 1.5, but as you can see, we had a massive push, and it was basically due to the confluences I mentioned earlier. So guys, once again, if you like this trade breakdown, please hit that like button, hit that subscribe button, and leave some comments in the comment section below. Let me know what else you'd like to see, and I'll see you guys on the next one. That was this trade on USD CAD, and I'll see you guys on the next one, guys. Peace.